Hey everybody, welcome to Option Pit. How's everybody doing today? This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com, welcoming you to the morning volatility report. Did the Fed just do another QE or did I miss something? Actually, that was one of my clients kind of like, wait a minute, we had a crazy rally yesterday. If you didn't take profits in vol positions, you might be regretting it a little bit today. Just looking at the little pop we've had, VIX jumping a little bit. I wouldn't be surprised if we gave some of this back. I sent an update on our strategy letter to kind of trim some of a couple of long positions. And again, wouldn't surprise me too much if we gave some of this back today. The rally yesterday was just, it was a big rally on basically what was not great news. Basically it was not great news. The fact that the Fed can't raise rates because, or they're starting to worry about it, that just means they're worried about other stuff. So I think stocks at some point, we had started to give back some of that frothiness. And that's essentially what we've got. We've got a market that is, even with the crazy rally yesterday, we still have a market that is trying to wean itself off the Fed. Clearly, Europe's not really going to do much as far as stimulating. And, I think the days of like the 12 VIX are going to be hard to come by now. I think any drops in vol are going to be hard to come by. Granted, yesterday we had a big one, but we were kind of pricing, a good amount of worry yesterday. So, and that's essentially how I see it. Today, where are the opportunities? Still, we haven't looked at we have started toying with positions in here, but oil, right? All of these ETFs, oil-related ETFs, the exploration companies, stuff like that. Oil continuing to look forward, just looking at the USO. None of this stuff looks good. All of a sudden, this is what? Oil going down on a strong dollar or whatever is a little deflationary. But gold is seeming to make a little bit of a rally again today, though. So there's a lot of conflicting signals, I think, and there's a lot of, let's just call it a lot of strange sentiment floating around. Every time, like you remember this in 2013, every time the Fed seemed to be saying they're going to do one thing, then they kind of pull back a little bit. And that is, I think, where we find ourselves, which again is going to add probably a little volatility to the market. The fact that we swing around 3/4 of a point in one day, that could be sort of the new normal for a while, which is, 15 VIX, 16 VIX, give or take. 14, I think really the very low end, 13.5, 14 maybe, once the earnings start coming out, if they're very good. Right? So now I think the market is setting up for that in the next piece. But as far as those big fast drops you saw yesterday, I don't think we're going to see that anymore. I do think there are some opportunities, though, to sell a little bit of more like in the ETFs, sort of away from the broader market vol selling, if you're inclined that way, and that's what we're going to look at a little bit today in our chat room. All right. So again, don't be surprised if you don't get the rally today. Keep an eye on VIX. It opened up right out of the gate, which generally I would say, when they open vol with a bid like that, it's not really good for stocks. I'm going to pull up the tick chart. Okay, until you actually see it, right? Until it really starts to dive. Okay, but right now it's looking kind of buoyant, which in general is not great for stocks, and there's still a little bit of bid for volatility. All right, everybody. You guys have a good day, and we'll see you in the chat soon. All right, everybody. Bye-bye.